Oh, ladies and gentlemen, let's go! Ford just released some earnings, Stock's up pretty big. We love to see it. It's a stock that's been struggling, I can't lie to you. It's been getting hit very hard this year. We're talking about started the year around $9.50, still sitting at $8, so down around 18%. Still a rough year for them so far. But let's take a look at these earnings and see why this stock kind of popped a little bit, right? Popped just a little bit. Well, let me just tell you, this one is what I would call an earnings freaking smasher. Absolute smasher. I'm surprised the stock isn't up higher. Just based off this initial report here. Non-GAAP EPS of 65 cents. We're going back to the normal days. What's going on here? Beats by 47 cents, and GAAP EPS of 60 cents beats by 44 cents. Excuse me? You beat on a profitability standpoint by, that's right, 4 times what they should have done. They should have been doing 15 cents, and they said, 60 cents. How's that for you? That's a smasher of an earnings. As far as profitability, obviously, too, an automotive revenue of $347 billion, up 2.3% year over year. Not big, but it's a beat by $1.8 billion. They were expected to decrease sales by around 7 to 8%. Holy crap. I told you they were going to beat. I didn't know they were going to pull a positive number out of their butts. I didn't think it was possible, but I knew the recovery was there. Q3 is better than I thought. I thought it'd be a lot closer to flat, but still negative. Still good numbers there. That's incredible. Adjusted EBIT of $3.6 billion versus 1.53 consensus. What can you say besides let's go? So the company says its robust Q3 performance reflected its better execution and benefits from the company's decisions 2 years ago to reallocate capital to franchise strengths in pickup trucks, SUVs, commercial vehicles, and iconic passenger vehicles, and phase out the unprofitable sedans that they were selling. The company says it made the most of the stronger than expected vehicle demand and net pricing, with inventories limited following the virus-related first half factory shutdowns. The automaker generated $11.1 billion in company operating cash flow and $6.3 in adjusted cash flow. That's incredible. That's really beautiful. And Ford expects full year profitability. And what I like about that, and what I really wanted to point out with that, if you talk about the fact that this stock has suspended its dividend, this is exciting news for those dividend investors that got rid of this stock. That, wow, they probably should be able to return to it by the start of next year. All things considered, Q1 of next year they should be able to announce a dividend. My assumption is that they will return back to normal if they're able to recover this good. That's good stuff. It's really good stuff. So we'll look obviously at the slides. We loved looking at the slides because look at this autumnal setting, this beautiful sunset. It's just great. It's just beautiful. Makes you want to cry, except for that ugly orange color on your truck. Makes you want to cry for a different reason. So, highest ABT since 2005, Q2 2005. Wow, that's incredible. Which means the balance sheet's just getting better. We love to see that. Portfolio's performing well. We'll take a look at that as well. That's really good stuff. I just like everything going on here. Least residual boosting up. Other exchange, it's boosting up here. So net receivables mix. Let's go. Crazy to see here. Net receivables overall looking pretty good here. We'll take a look at that obviously as we talk about the balance sheet, which we love getting into that. So we enjoy getting to the balance sheet, and this is more talking about Ford Credit here. We don't necessarily love Ford Credit. It's not great. We're talking about junk levels here, so That's, I think, really all they share in these slides this quarter so far that I've seen. So again, they talk about maturities in terms of assets. It does outweigh the maturities and debts that they're expecting for the future at least. And the rest of this really just talks about Ford Credit. I mean, nothing crazy about Ford Credit in my opinion. I would obviously turn us first to this earnings report. Let's just scroll up 1 second, okay? Don't you dare. I'm going to scroll up and you're going to say nothing about it. Obviously, a main point here is they're ready for the fourth quarter launch of 3 anticipated all-new vehicles, the 2021 F-150, the electric Mustang Mach-E, and the Bronco Sport, which, by the way, it's a beautiful, beautiful vehicle. That Bronco, the new Bronco, looks freaking amazing. I don't know. Expecting a positive full year EBIT. And a fourth quarter EBIT between break even and a $500 million loss. Not as good as we might have thought. But again, the recovery this quarter was magnificent. Nothing crazy, obviously. You look at the difference between net income. Actually, so far in the third quarter, big improvement. All things considered, $2 billion more in terms of net income this quarter, which is pretty crazy. But if you look year to date, it is down around $200 million. So you need to mention that for full year so far. So good stuff as far as the plan. They're competing like a challenger, right? They're going to be focusing on great models, boosting them, becoming more profitable and more affordable, raising the quality of their vehicles, and allocating capital properly. In North America, the automotive business gained 1 point of market share. Pretty good for them. I'll take that. In the U.S., F-Series truck picked up 1.7 points of industry share to more than 35%, which is really big. 35% of the truck market. Pretty nice. The regional mix of popular and profitable Ford trucks and commercial vehicles reached 57%. Wowee. That is good. Ford's Europe business continued to derive benefits from its restructuring program with a cumulative $1 billion reduction in structural costs since 2018. Cool there. SUVs accounted for more than 30% of the vehicle mix in Europe. So again, this is big stuff. Big stuff. Regional highlights too. They show market share. They've got 13.6% of the market share in North America, South America 5.7%, Europe 7.8%, China 2.4%, which could be big, by the way. I'm just going to throw that one out there. But total automotive industry, they've got 6% of the market share potentially here. So, yeah, pretty nice. You see lack of profitability, obviously, in South America, Europe, China. North America had really good profitability, surprisingly. But not much as far as the other countries are concerned. So wholesale product shipments in China were up 22%, which is pretty nice. You gotta love to see that. And in South America, Ford posted its fourth straight year-over-year improvement in quarterly EBIT. You know, good for that. Good for them. I'm proud of them. In the fourth quarter, Ford is launching, obviously, as we saw, Bronco Sport, Mustang Mach-E, and the F-150. These are big vehicles for them. I think this is pretty crazy. By the end of the year, customers will be able to choose from 12 hybrids and fully electric vehicles around the globe, and there is much more to come, including developing a complete EV ecosystem. So I think this is big. 2021 is a big year for Ford. I mean, we're talking about the progress on the F-150 electric. Could be massive for them. And just their other electric vehicle lineup here could be really big for them in catching up the market share with Tesla in terms of electric vehicles, as long as all goes well. They're expecting lower wholesale shipments of the F-150, sequentially higher structural and other costs related to manufacturing launches of the Mach-E and Bronco Sport, not unexpected. That's why you see the EBIT expected to be a little bit less, because, well, you're launching 2 new vehicles. Pretty crazy. Now, I would also just lead us straight to the balance sheet. As we get there, we love talking about the balance sheet. You know we do. I love it. This time we're looking on the right side. It's a 9-month comparison. Thank you, Ford. I appreciate you for that. $111.7 billion in total current assets versus $114. A little bit of decrease there, but overall you see total assets rose 259.9 versus 258.5. You saw a rising total assets number, which is good. Total current liabilities did shrink. Hey, that's what I like to see. We're talking about $93 billion versus $98 billion. And from a total liabilities in general, it did rise by right about as much as the total assets rose, 226.7 versus 225.3. So stockholder equity shrank just a wee bit, 33.1 billion versus 33.2 billion. Really, it's only a matter of $70 million, which again, I'd retire for life with that, but still. Balance sheet technically did grow a little bit. And I'm pretty happy with that. I mean, $33 billion in liquidity there and equity. It's pretty nice. And as far as liquid assets, you're talking about these total currents of 111 and liquidity. Look at that cash pile, $24 billion there. Pretty big. So I'm quite excited for Ford. I think this stinker's undervalued. I mean, I think it really is. I mean, how else do I mention it? Automotive revenue this quarter of $34.7 billion, yet the thing's trading at a market cap of $30 billion. I mean, I don't know what else to say besides the fact that this thing is, I think it's completely undervalued. I think it obviously got maligned quite a bit because of everything going on. I get it, but I still think there's a lot of value in the stock if you're talking about holding it for the next 2-3 years. As far as the dividend returning, I mean, once the dividend returns, you'll see a lot more investors actually buy into the stock, and I think you'll see some capital gain as well as just your dividend. I like Ford stock right now. I really do, and I think it's worth picking up.